Welcome to the deep dive. Today we're zeroing in on DCM Shriram Ltd. They're a major industrial player, and we're dissecting their recently released Q4 FY25 and full FY25 results. These just came out May 5th.
Exactly. And it's quite a diverse picture, isn't it? DCM Shriram isn't just one thing. They've got agri-rural, that's everything from sugar and ethanol, Shriram Farm Solutions, bioseed, right through to fertilizers.
Right.
Then there's the chemicals and vinyl business, a big chunk, and also the value-added segment with Finesta Building Systems.
So our mission today is really to kind of get under the hood, understand the key performance indicators, look at their strategy updates, and, the industry outlook for each main business.
Precisely, to give you a concise but thorough understanding.
Okay, so let's start with the big picture, the overall footprint. They operate across 12 locations, employ, over 6,200 people?
That's right. And it's interesting, they highlight their sustainability efforts, too. Harvesting and conserving 10 times the water they use, and 36% green energy.
That's pretty significant. It shows a clear commitment.
It does. And it sets the stage for understanding how the different parts fit together. Revenue-wise, agri-rural is definitely the heavyweight. It pulls in 61% of their total revenue.
61%, okay.
Then chemicals and vinyl contributes 29%, and Finesta, that value-added bit, makes up the other 7%. So you immediately see where the main focus lies.
Right, that split is very revealing. And the financials for FY25, the top line numbers look pretty substantial. Net revenue at $120.8 billion.
Yes, and PBDIT at $14.7 billion, PEPR profit after tax at $6.0 billion. Their net worth is solid too, around $69.6 billion, and they've got that A-way plus stable credit rating from ICR.
So overall, a picture of, stability and considerable scale.
Indeed. And we should probably mention the management message in the results. They flagged the global economic uncertainty, U.S.-China tariffs still being a factor, and also the RBI's pro-growth stance here in India.
Right, that wider context is always important.
It sets the scene for all their operational decisions, really.
Okay, let's dive into the segments then. Starting with chemicals and vinyl. The chemical side, wow, a 52% jump in revenue in Q4 year-on-year, and 31% for the full year. What was driving that?
Yeah, that really stood out. It was primarily volume growth, and that's directly tied to them commissioning some major projects. They brought an 850 TPD caustic expansion online.
TPD being tons per day.
Exactly, tons per day, plus a new 120 megawatt power plant and a 52,500 tons per annum hydrogen peroxide plant. So you saw caustic volumes jump 29% in Q4, and their ECUs were up 13%.
Okay, hold on. ECUs, for those of us maybe less deep in the chemical sector, what are those exactly? Why do they matter?
Good point. ECU stands for electrochemical unit. It's basically a key efficiency measure in the chlor-alkali process that's making caustic soda, chlorine, hydrogen from salt brine. So a higher ECU number generally means they're, more efficient, getting more output for the input.
Better efficiency. And it looks like that new power plant helped costs too, along with lower input prices.
Exactly. Having their own captive power makes a big difference. Less reliance on the grid, more stable, potentially lower costs. And they also mentioned upcoming chlorine downstream projects. The idea there is to better utilize the chlorine that's produced alongside the caustic soda.
Makes sense. Integrate further.
Yes.
Yeah.
And it's worth noting, India is actually a net exporter of caustic soda right now, which suggests the domestic market can absorb their increased production.
Okay. But it wasn't all smooth sailing on the project front, was it? The ECH plant.
Yes. The epichlorohydrin, or ECH plant. They did hit some technical issues which caused a delay in commissioning. But the latest is they expect trial runs to start by the end of May 2025. So that's one to watch.
Definitely. Okay, shifting within that segment to vinyl, growth was more modest there.
Yes, much more measured, but still positive. Q4 revenue up 1.7% year-on-year, and the full year up 5.7%. Again, driven by higher PVC sales volumes.
But they mentioned some headwinds here. Weak global PVC demand and Chinese surplus PVC being dumped in India.
That's a significant factor, yes. Indian PVC demand actually grew, maybe around 7%, but a huge chunk of that, like 68%, was met by imports.
Wow, 68%.
Yeah. So when you have surplus capacity, particularly from places like China, pushing lower-priced PVC into the market, it puts real pressure on domestic producers like DCM Shriram.
Is anything being done about that?
Well, they did mention an anti-dumping duty investigation is complete, but the notification is still pending. So the government seems aware, but action is awaited.
Despite that pressure, though, their capacity utilization looks really high.
It does. 96% in Q4, 91% for the full year. That really speaks to their operational efficiency, managing to run near full tilt, even with those market challenges.
Okay, let's switch over to sugar and ethanol, another segment showing positive revenue trends. Q4 up 16% year on year, full year up 4%, reaching 3,862 crore.
That's right. A couple of things drove that. Domestic sugar prices were higher, both in Q4 and across the year. Plus, domestic sales volumes were up because of higher release quotas set by the government.
And
Ethanol prices were also up, mainly because they shifted more towards grain-based ethanol production, which fetched better prices. But volumes for ethanol were actually a bit lower in both periods.
interesting. And looking ahead for sugar.
The global picture suggests a potential supply deficit for the upcoming 2024-25 season. And here in India, closing stocks are expected to be lower. So that could potentially support prices.
Sounds promising for them. And they've been investing here too, right? In expansion.
They have. They commissioned a new 2,100 TCD sugar capacity expansion at their Loney unit back in November 2024.
TCD again, tons of cane per day.
Yeah, I got it. And they also commissioned a new 12 tons per day compressed biogas plant CDG at Ajbapur in March 25. So diversifying within that agri-rural space, tapping into renewables.
Right, CBG from agricultural waste. Makes sense. Okay, let's pivot again. Fenesta Building Systems. Revenue growth here was more moderate, 4% in Q4, 5% for the year.
Yes, modest growth. But the really interesting number for Fenesta is the order book.
Oh, what's happening there?
It grew almost 36% in Q4 and over 19% for the full year. That suggests pretty strong underlying demand for their windows and doors.
So future revenue potential looks good.
It points that way, yeah.
Yeah.
However, their profitability, the PBIT and PBIT margin, was actually down in both Q4 and the full year.
Why was that, if orders are up?
They put it down mainly to higher fixed costs,
Yeah.
probably related to expanding manufacturing, and also increased spending on sales promotion. They're investing for growth, basically. And they have a new aluminum extrusion plant planned for Koda, expected in Q4 of FY26.
So bringing more production in-house, and their reach with Fenesta seems quite wide.
It is. They're in 247 cities in India through like 380 dealers plus their own showrooms. And they have some international presence too, serving a lot of ground.
Okay, next up, Shriram Farm Solutions. This looked like a strong year overall.
Very strong, FY25, yes. Revenue up 17% in Q4 and a solid 21% for the full year.
Oh.
Now, Q4 itself is usually an off-season for this business, so the PBIT for the quarter was negative. That's expected.
Seasonality.
Exactly. But the full-year performance was really driven by their research wheat varieties doing well. And they're innovating, too, launched 9 new products in crop protection and specialty plant nutrition during the year.
Good momentum there. Now, fertilizer. Bit of a mixed picture here. Q4 revenue up slightly, but full year down.
Yeah, Q4 FY25 revenue up 2.5%. The full-year revenue actually dipped by 3.8%. Sales volumes were a bit higher in Q4, but down for the full year.
But profitability improved.
Interestingly, yes, PBIT and the PBIT margin were better in both Q4 and for the full year. So maybe better cost control or a more favorable product mix, perhaps.
And there's always the subsidy angle with fertilizers.
Absolutely crucial. As of March 31st, 2025, they had 161 crore in subsidy outstanding from the government. Getting that cash in is, pretty important for their working capital.
That's a fair chunk of change tied up there. Okay, turning to Bioseed. This segment seemed to have strong growth.
Very strong. Revenue jumped 41% in Q4 year-on-year and up 17% for the full fiscal year. Again, Q4 is usually quieter, but the growth, especially for the year, was mainly driven by their corn seed business.
Corn, okay.
Yeah. And they also have an international footprint here selling corn seeds in the Philippines, so spanning beyond India in that specific area.
Interesting. And finally, there's that other segment, cement and Haryala Kisan Bazaar. Revenue was down here.
It was, yeah. Down in both Q4 and the full year. The cement business uses waste from their calcium carbide production, so its performance is linked to that and, general cement market conditions. And Haryala Kisan Bazaar, they've streamlined that. It's now mainly just 5 retail fuel pumps.
Okay, so rationalizing that part. So summing up the segments. It's definitely a mixed bag. Strong growth in chemicals, Bioseed 2, solid performance in sugar and ethanol farm solutions. But some definite challenges in vinyl with those imports and a downturn in others.
That sounds about right. And overlying all of that is this clear focus on strategic projects. They're really investing heavily in capacity and efficiency.
You listed quite a few earlier, the caustic, the power plant, H2O2, sugar expansion, the CDG plant, all commissioned in FY25.
Exactly. And looking ahead, the big ones are that ECH plant, hopefully coming online soon in Q1 FY26. Then the Fenesta aluminum plant in Coda, and a large captive renewable energy project for Coda, both targeted for Q4 FY26.
More renewable energy focus there.
Yes, and further out, Q1 FY27, they're planning aluminum chloride and calcium chloride plants, plus ongoing renewable energy efforts at Baruch as well. It's a pretty packed pipeline.
It certainly seems like it. Lots of investment aimed at integration and cost savings, I suppose. Okay, let's just loop back quickly to the consolidated financials for the full year FY25. We mentioned the revenue growth, but how did the profitability look overall?
Very healthy, actually. PBIT, and PAT all showed 35% year-on-year growth. That's quite strong.
35% across the board.
Pretty much. Now, finance costs did go up in FY25. They mentioned it was due to less interest being capitalized as projects finished. But the underlying profit growth is undeniable. And reflecting that, the board recommended a final dividend of 170%.
A significant payout. Okay, so bringing this all together, this deep dive shows DCM Shriram as, well, a really diverse company. There's clear momentum in chemicals and bioseed, resilience in the big agri-rural segments, and they're clearly navigating some specific challenges, like in vinyl. But underpinning it all is this major strategic push on capacity expansion, efficiency projects, renewables.
Exactly. That seems to be the core strategy. Expand capacity, drive down costs, especially through things like captive power, and keep innovating with new products across their different verticals.
Right.
So maybe the final thought for you, the listener, to mull over is this. Considering everything we've discussed, the global economic uncertainties, the specific competitive pressures like PVC imports, the cyclical nature of agribusiness, how well-positioned is DCM Shriram with these strategic expansions and their integrated model to actually deliver sustained growth and profitability in the year ahead and maybe beyond?
It's definitely a complex equation. Lots of moving parts, as you say. How effectively they execute on these big projects, manage the market headwinds, and leverage that integration will be key.
Absolutely. Definitely food for thought. Thanks for diving deep with us today.